That bullish call on Under Armour. Let's talk about it. Upgraded to a buy at Argus. $20 is the price target. Okay, so Stephanie Link, I begin with you. I got another set of numbers for you beyond the $20 price target. I got down 24.5% year to date compared to Nike's up 31.5% year to date. Are those the only numbers that really matter here?
Well, sort of. It tells the story, right? I mean, Nike is actually executing. They have all the right products. They're growing digital like a weed, 82% versus 75% sequentially. And the important part about digital is it carries 10% higher margins. So the more that they increase digital and online, which is 30%, going to 40% in the coming years, that will help the bottom line and the operating leverage. Under Armour, look, there's a lot they can fix. And you know me, I love a turnaround story. But this one seems a bit hard, right? It just seems like, yes, they can improve on product. They can improve on cost cutting, on their supply chains. And you know what? The new CEO has done a lot already and has improved a lot of things. And I do think there's margin upside. But I just feel like the jury is out on the product side, right? And when you have a competitor that is so large like Nike doing it all right, it sort of is easier just to own the one that's doing it all right.
How do you counter that, Jim, if at all?
Matt Boss had a super piece out about JP Morgan today about Nike, and Nike's direct-to-consumer. They're making a fortune. Nike's partners with the Chinese. They're going to do even better. Nike is just a juggernaut, and why I say that is that it's barely up today on that call. I would prefer that to Under Armour. But when Under Armour sold MyFitnessPal, which I really didn't like, and they got $300 million for it, I started thinking maybe they're going to do what's necessary and become Lululemon for outside, okay? Because they do have, and one of the things that was amazing, and my hat's off to Kohl's, the existential crisis I'm taking off the table. It was a decent quarter, but they often talk about just kind of leisure wear. Why does Under Armour not double down on leisure wear, really start thinking about reducing the shoe footprint, and then I'd like it more. It's just, it's a work in progress, whereas Nike is cheap. If China comes back on, and Eunice, you had such a piece this morning. You guys got to start getting up at 2:30 with me and Steph and working out and running 7 miles like she does. No. Because Eunice, you had a report today that was amazing. It's not only about how China's back to normal. Like, China's booming, okay? And it showed you Starbucks. China's just spend. It's like it never happened. It's like the pandemic never happened. And that makes Nike incredibly undervalued.
Which is why, Joe, you own Nike and Lulu.
Ooh. 100%. It doesn't mean that Under Armour can't have a rally towards $20, but everything that Jim and Steph has spoken about, I agree with. And I'll add one more thing. When you look at S&P 500 companies and you identify for the consumer discretionary sector, the ESG stocks who are showing the greatest strength in the further adaptation of ESG, number 2 is Home Depot, and guess who's number 1? Nike. Think about ESG investing, and when you do that, you think about Nike.
Yeah, there's Nike shares. We're watching them right there.
It used to be like that, but yeah.
John Najarian, I know you wanted to say something. I saw you.
Yeah, Scott, thank you. When Under Armour really broke into the mainstream, it was because they had edgy commercials, Scott. They had the compression wear was great, but they had edgy commercials with big stars. Now, with digital on that side, they are way behind. To Steph's point, 82% jump over at Nike. You know what it was at Under Armour? 30% of their sales. So they've got to do something, Scott, to make their digital feel more like those original ads where it grabbed you and so forth, because there's so many sites you can go to buy athletic wear. And Nike continues to do a great job with theirs. Meanwhile, Under Armour's just sort of watching everybody else and wondering what's going on, apparently. Yes, the stock's up from $8 in May to $16, but I don't know how it breaks to the upside unless they can really address digital in a big way.
It's really interesting what you say, John. I couldn't agree with you more. And Jim, you know, it's almost like this was a moment in time stock. And it was the personification almost of edge. You had an edgy brand. You had the most edgy of CEOs and founders who was going to get right up in your face and tell you that they were going to beat Nike at Nike's own game. You had the commercials, as John said. You have athletes like Cam Newton at the height of their games winning a national championship wearing Under Armour. Steph Curry winning multiple NBA championships while endorsing those sneakers. It was a moment in time that feels like it's past.
All during that period, as John said, Nike was spending on technology. When you go to the Nike store on Fifth Avenue, which have not been since the pandemic, but no one was carrying a bag out. It was just the idea of visualizing. We all made our own shoes, and then you start seeing these StockX's where people are trading LeBron's shoes. I mean, it became cult, but it also was technological. And yes, you have to hope that Kevin Plank can get it together again, and they've got a terrific CEO who I think Frisk is trying to do a good job, but the technology spend must be made. Look at what happened with Lowe's and Home Depot before Marvin got into Lowe's. They spent nothing on technology. Home Depot spent a fortune on technology.
So did Under Armour, though, right?
No, but they didn't bring in, I mean, look, John Donahue. I mean, look at what Nike's done. I mean, Parker was a technologist. The whole time he was building technology. Plus, he made a deal with the Ministry of Sports in China. I mean, that was a good call, wasn't it?
It's just so interesting. I mean, Kevin Plank, he foresaw what was happening with technology and athletic apparel and things like that. They invested heavily in tech.
But tech apparel, but not tech. I know he's got Salesforce in there. If I were Tim, I'd just say, I'd call Mark Benioff, and I'd say, listen, whatever the heck you did with Adidas, just do it for us. I mean, I know that they have a good relationship, but it's true. I mean, technologically, the product was good, but I'm not talking about technology, the product. I'm talking about the notion of direct-to-consumer, which has, as Steph, the margins, direct-to-consumer, as you said.
Yeah.
I mean, it's exciting to see direct-to-consumer.